I ask you where you'd like to start, Stacy. Which of the many things announced and the sort of guidance given is the most important factor here?
Yeah, so look, I mean, the quarter itself, revenues were actually not too bad. It was the gross margins that really killed them. And the guidance was clearly awful. Revenues were bad. I mean, they had a hockey stick in the back half from last quarter. Clearly, the back half is not playing out the way they thought. Gross margins are falling into the abyss as they get higher costs on their chips. Clearly they're in a tough spot. I mean, they announced a number of actions to try to salvage, to stop the ship from sinking. They're cutting CapEx. They're cutting OpEx. They actually finally suspended their dividend. They had cut that by 2/3 a year and a half ago. So they've finally suspended it. And they're doubling down on bringing in partners that will co-invest on manufacturing capacity. Recently they sold half their fab in Arizona that they're building to Brookfield. And they just sold half of their fab in Ireland, Fab 34, to Apollo for $11 billion. And they got that cash flow in on the quarter.
But I mean,
look, this was like, I've used the phrase worst earnings from Intel in my career a number of times over the last year and a half, 2 years. And this one probably takes the
this time you mean it.
This is probably the worst I've seen. Yeah.
As you know, Stacy, I had the opportunity to speak to Intel's CFO, Dave Zinsner, when the numbers hit. And we got into missed opportunity, I guess. This is what he said about the data center business. And I'm trying to understand what he meant. But he basically is saying they were overexposed in CPU, and I guess therefore by extension underexposed in GPU. We all know the story. Anyone that lives or works in the world of technology knows that all of the investment is going to high performance GPU or AI accelerators. Intel has one, Gaudi. So explain what Dave meant there, please.
Yeah, you bet. So they have been clearly over-indexed. I mean, almost entirely indexed to CPUs. And there's a few things going. Even within CPUs, by the way, they've been losing a tremendous amount of share to their smaller competitor. So that's not been good. And then over the last, as the AI boom has happened, we've had a share of a shift in the spending patterns away from CPUs toward GPUs and other types of accelerators. And by the way, there's a broader question there. You could argue, is that a cyclical trend or is that a structural trend? Like in 5 years, is the data center CPU TAM bigger or smaller than it is today? And you could legitimately argue that it's smaller. So I mean, that's the issue. And the problem with Intel on that front is they don't really have that much of an AI or an accelerator play. They have a product that's called Gaudi. They said that they're going to sell $500 million worth of what's called Gaudi 3 this year. I mean, it's effectively a rounding error, right? I mean, AMD said they're going to do $4.5 billion in data center revenues, and I think people think they're going to do more than that. And NVIDIA, data centers, they might be $100 billion this year, and the $500 million doesn't make up anywhere near, the air pocket that's happened both as they've lost share in CPUs and as that spending has shifted. And so that's kind of the problem. And frankly, Gaudi at this point is baked. That product is shipping. It's very clear. The general demand for it relative to everything else is very, very minimal. It's just not enough to close that gap. So they don't really have much of an AI story, unfortunately.
Stacy, just real quick, on cyclical end markets for them and non-cyclical, I mean, the way that the CFO put it to me is that they just hadn't responded to the realities of their revenue, hence the reduction in OpEx, CapEx, and headcount. But there did seem to be some glimmers of hope that coming into the current period and the rest of this calendar year, there were improvements in those markets?
Yes and no. So I think PCs in general are better than they were. Remember, though, they don't sell PCs, they sell CPUs, right? And they talked about there's inventory that's digesting in the back half, which is helping to impairing some of the revenue. Now, this is something that I've been worried about. We track the CPU channel pretty religiously, and you get overshipment, you get undershipment, and I've been concerned that at least in Q4 and Q1, I think there was a fairly significant amount of overshipment of CPUs relative to PCs, and I think they're paying for that now. So you have some cyclical downside there. I think on the data center server side, there's been some green shoots that hopefully demand is getting better, again, off of some awful years. But again, people now having recession worries and everything else, and again, they're still losing share. The data center Gaudi lift isn't really enough. And then some of their other businesses, they have an FPGA business called Altera. And all the FPGA companies, it's the same thing. They're working off a ton of inventory, and that's not really getting better yet. They still consolidate Mobileye. They own most of that company's own. Mobileye reported yesterday morning. We don't cover Mobileye, but just factually, they slashed their guidance for the rest of the year, and so a bunch of revenue had to come out from there. It's just not great, and part of it, I think, is their own doing. Last quarter, they had sort of suggested we'd be seeing above seasonal growth in the back half, and it's clearly not happening. The macro's getting worse, and then. On the cost side, again, they've got some incremental cost headwinds that are pretty severe that are impacting gross margins and cash and earnings and everything else. So,
Stacy Rasgon, senior analyst at Bernstein Research, whether or not that is and will be the worst Intel print of your career, I think you broke the numbers down. Okay, very quick. We have 10 seconds.
10 seconds. The silver lining, the cash that they're saving from the cost cuts and the dividend, suspension and the CapEx cuts, and then all of the money they're bringing in, they'll live. I don't know what kind of a life it'll be. They'll live. That's probably $40 billion of incremental cash over the next couple of years. So they'll live. But what kind of a life it's going to be? I think that is the question that we're all wrestling with right now.